Hey James, how's it going?
Hey, all is well. It's a good Monday night. It was a
Yeah,
fun day today.
for sure, for sure. So we figured we would take 10 or 15 minutes and just kind of give some examples of a systematic approach and two perspectives on thinking from a systematic method regarding today's price action. So James, why don't we share your screen?
Sure.
Let's see if we can. What we'll do is there we go. And one of the things that it's really important. It's really easy to do when you're trading is to look at the day as a whole and just kind of jump in on the open. And James, can you actually just kind of slide the chart over to maybe the first 15, 20 bars just so we can see yesterday's context?
hmm
It's really easy once the day opens to have no idea what your plan is and really build a plan based on what the bars are bringing to the table. And that's a really dangerous way to trade because what you're going to do is you're going to immediately see a gap up on the open and buy. Or you're going to look at bar two and think bar two, it's a bull bar after a gap. I should buy that. And one of the things I always think about is I always talk about one of my kind of systematic methods is wait for 6 bars. Generally, most opens, there's an 80% chance roughly that you're going to get some kind of double top or double bottom on the open. What that means is you're going to have a trading range. There's a 20% chance that you're going to get a trend from the open. That's a generality statement. And so one of the things I do all the time is I look at the first bar of the day and I ask myself, and James, you can, if you can just kind of go a few bars. Yeah, just like that. Keep going a little bit.
This
That's
way?
perfect. That's
Yeah.
yeah, that's perfect. So if we look at the first bar of the day and we look at that bar and say, okay, is it a credible sell? And I'm always thinking, where's the swing trade? And typically, what I want to see at a minimum is consecutive trend bars up or down on the open, or I want to see some version of a second entry, a double top or double bottom. And so in this case, for example, you can see the bears who sold below one or better three and put a stop at the high of the day, they had a reasonable chance at catching the opening swing. And my general expectation on an opening swing trade is at least two or three legs or two or three attempts. So when I see a bar like bar three, I want to see strong follow through. And I'm always expecting 80% chance of a trading range at lasting roughly 6 to 12 bars. So if I'm selling below three and I see four, five, and six and seven, that's a lot of overlapping bars. I'm expecting a leg in a trading range. So what am I going to do? I'm going to get out above a bull bar, some sort of bull bar, such as bar, I believe it's bar eight or
hmm
even bar 11. And then from that point, what's my expectation? If I see a bar like 11, I'm expecting a trading range, not a trend, because if it's going to be a trend, there's going to be signs of a trend. So if you buy above 11 and you see a bar like, what bar is that? That big bull bar, bar 14. In a trading range, when I see strong breakout bars, I want to see a consecutive strong breakout bars. So I want to see 14 be a big bull bar, and I want to see 15 be a big bull bar. And without that, I'm always thinking trading range. And therefore, if I'm long on a bar like 14 and it's a really big bar, because it's at the top of the trading range, if 16, I believe it's 16, the big bear bar starts to go down, or maybe that's 15.
15. Yeah,
Oh,
15.
sorry. So if 14 is a big bull bar and I'm
Yep.
long and then I see 15 start to go down, I want to be pretty quick to exit. And if I didn't exit on 15, what's my expectation at the close of 14? It's a trading range. Therefore, there's going to be sellers above. And so, what's the point of this? The point is on the open, there's typically an 80% chance that you can have the expectation of leg counting, finding some sort of three legs down or three legs up. In other words, you're typically going to find some variation of a double top or double bottom or a wedge top or a wedge bottom on the open. And at some point in the day, you'll get a big bear breakout. And when you get the big bear breakout, when you've had a lot of trading range price action like we had later in the day, the other thing I think about is Is that breakout resetting the market cycle, or is it just continuation of a trend that already formed to the left? And in this case, it's a triangle that had a bear breakout, but it's really a bear channel. And that's why you see a lot of second leg traps. And whenever there's a lot of trading range price action with a lot of overlapping bars during the breakout, in other words, there's not a series of consecutive strong trend bars, I'm typically expecting a retest of that trading range price level. So in other words, the 11 low. But the point is, on the open, always expect an opening reversal. James, is there a couple things you want to talk about?
Yeah. So in terms of thinking systematically and, the kind of, if, the kind of things that most of the students, I think, benefit from in Systems Academy that you might not get in solo study, or might take a long time to come to in solo study, are uh, the rigid protocols for understanding something. So in Systems Academy, we'll do both, signal and setup studies. So understanding the signal that you want to design a system around, and really understanding every nuance of that. How to organize your entry package, your trade management, your early entries, your early exits, your re-entries, your different variations of take profits, and how to assess those, to do your continuous estimation process on that. But at the same time, we also do context study. So in terms of context, that is, as Brad was saying, around the open, one of the most significant impacts, or one of the things that has the most significant impact around the open is the context, how the previous day closed. The previous day closed with a bull reversal, and then we got the bull breakout. So here we are, we ended likely, this was a strong bear reversal, and it was all this is, I think it was 4 15-minute closes. 1, 2, 3. Yeah, 4 15-minute closes with all lower highs, and then, bull reversal. So this was not strong enough to go from always in short to always in long, but we opened always in long. Big breakout back above the previous day's high, but rejected the opening gap and came back down to test lower. And as Brad was saying, we went over all of this, but one of the things that we do in Systems Academy, even with context, is studying tons and tons of charts for X reason. And one of the things that is most useful for students to understand is the levels that the market is likely testing when it is moving towards or away from things. So if the market comes down to, say, test the opening gap on the open and doesn't get there, and you get a strong reversal, then the probability that that opening gap is going to close for the next 10 or 20 bars is actually pretty low, because if it doesn't close within a certain period close to the open, it will typically close later in the day. And so there's a lot of calibrated expectations students can have, or traders can have, and especially SA2 students, which they can develop through that chart study for specific context variables like the opening gap. And then the effect of different sizes of opening gaps on the probability that it will close, and the range of probabilities for timing for when that is likely to happen. So one of the things that I found interesting today was actually the gap closed at bar 42. Well, that's pretty late in the day for an opening gap to close, and 32% is a relatively good size. It's a normal gap. It's not a huge gap, and those will typically close sooner. As a result, when a typical gap takes that long to close, it typically means that bears are not in definitive control, right? Which means that we're in some variation of a trading range day. So when you see these climactic bars, coming down, this is your first close below, climactic follow through, but then very poor follow through after that. The final, the bear bar that created the swing low here is not a strong close. And then you get the strong bull reversal, right? So this is all a test of something. So then you go left and you look for what it's likely a test of. Was trying to test the previous day's high, didn't even quite get there. Tried to test previous day's high. And then there's all of this trading range price structure here. There's also 15-minute levels there that it was testing. So there's always something to the left that the market's testing. But here, when you see this breakout happening late in the day and you know that bears are not definitively in control, that the probability is not we're starting a new strong bear trend, then for those who are developing breakout and follow through systems, this is not the kind of thing that you would want to hold for a measured move. So a lot of students will actually study whether or not holding for one-to-one measured moves is the highest probability for their system. And so if a student were trading that, then their measured move target would be down here. So where would they get out? So if they took their buy the or sell the close entry, or waited for a small pullback, or even waited for a larger pullback if their system suggested that they should be taking 50% pullbacks, well, their 50% pullback would have filled here. So this is where the flexibility of the system really comes into play, and understanding how your signal is appearing, and not just the immediate context, but the larger context, and understanding the different context variables like opening gap, when the gap closes, the size of the previous day's range and what levels are being tested in there, what type of day the previous day was. All of these factors come into play when we're thinking about how to manage trades. And this doesn't mean that students study these things on the initial pass of their systems. These are variables that are accumulated over many passes of a signal study. But these are the things which we find disproportionately benefit students in the long run when they sit down and study 100, 200, 300 charts just for the opening gap and study the behavior around that. And that's actually why I built the context dashboard, is so that people can find one of these context variables, print out a ton of charts, and just study those over and over and over again, and really internalize just the price structures around them. So these are the kinds of things that we find are really high value study methods. And for even those who aren't going to be in SA2, or don't want to do it, or don't have time to do it, just taking the time to set up a kind of study program for yourself that is oriented around these kinds of high value context based features goes a very long way to helping you feel comfortable, just easy throughout the day, and able to modify your behavior as things change.
Absolutely. And one of the things I want to say, as far as something you can take away right now and even work on tonight or today, and it's one of the things I discussed with the systems academy class recently, and that is, if you take a list of your trades, categorize them from the worst losing trade to break even. So build an Excel spreadsheet. Most brokers allow you to download it. Download the trade history over the past 100 trades and categorize the losses. Was it a trend or was it a trading range? And what you can do is, most losses for a lot of people, there's a lot of common similarities, and you can think through a systematic method to help you not take certain bad trades. So for example, for a lot of people, they overtrade. What you can do, if most of your winning trades are in the morning, have a cutoff period. Only trade the first 2 hours of the day. Don't trade the latter portion of the day. Or if you have a lot of instances where you end up trading against a trend, don't go against a trend if there's more than 10 bars above or below the moving average. Those can all be very small versions of a system that can be comprised into an actual larger trading plan or trading method. But a system can also be various things to keep you out of the wrong direction. And those are things you could do right now without Systems Academy.
Absolutely. Yeah. The one of the students in the upcoming Systems Academy is actually building a open source library of price action features, which anyone who uses PineScript will be able to import. And there's some of those really great heuristics for, like you said, the simple systems, flags for if you're above or below the EMA, so you don't try to fade it and counter trend trade, things like that. But yeah, there's a lot of very low hanging fruit for, like Al says, just stop doing the stupid things That
Hmm.
goes a long way.
Absolutely. And even just something as simple as a 3-bar microchannel system, pretty easy to build and pretty effective, and doesn't take a lot of variables to use it. So that's something you could do even right now.
Indeed. Well, um, we wanted to keep this one short tonight. Just get on here and talk for a few minutes. You want to answer questions in the on the video after it posts, and people can leave
Yeah,
questions there.
we'll review the comments as they come. So thanks everybody for joining, and we'll talk to everybody soon.
Awesome. Everyone have a great night.